moving into today's trading idea, we have three. The first one will be UWC. So UWC has been pretty much in the downtrend move since December last year. So you see a series of lower high structure was formed along the way, and the stock is actually struggling to surge higher after the resistance was kept right within this red line here, represented by 88-day moving average. Right, so this level has been tested at least number of times, at least in two separate occasions, but thing about to change following yesterday breakout move for the first time since December above the medium-term downtrend line and the 88-day moving average, and the breakout occurred on the back of high trading volume. So high trading volume was actually building on the series of a high low structure, a gap out before. So in a nutshell, this recovery does appear more have a stronger base on the stronger baseline. So that means there is actually more room for the upside. As you can tell here, the first breakout, you can tell the RSI is actually gaining, but the subsequent follow through, you see how the RSI structure has started to shift upwards. So that is giving you an indication that overall momentum has remained elevated and could actually continue to boost the share price higher toward the technical resistance at 3 ringgit 48 cent and 3 ringgit 78 cent, while the cut loss will be below 3 ringgit and 3 cents. So risk to reward ratio quite attractive at 6.7% downside risk versus 16% upside potential. For quant, we are using growth style with the quant score at 6.5. Moving on, second stock will be UMC, also known as UMedic Group. So UMedic Group has been highlighted in earlier traders almanac on April 19. So the stock is actually gained 10%, traded slightly above our first target. But as per yesterday, the new high structure on the back of high trading volume, overall momentum remain quite supportive, and we're expecting the ongoing uptrend to continue and the short-term uptrend move to accelerate further. So this actually banking on the new higher structure that being created along this 23-day moving average as the bull continue to take charge. So risk to reward ratio quite attractive with 9% downside risk and 20% upside potential with 1 to 2.1 risk to reward ratio. So for quant side, we are using quality with this quant score remain high at 7.55. Last but not least will be Optimac. Also the stock has been highlighted in earlier traders almanac. I think back in 27 March, the stock is actually gained about 9.33%, hitting at 70.5 cents, slightly above our first target, 69.5 cents. The subsequent correction, however, can be I would say quite steeper than we earlier expected. However, the downside was kept right within what we call it the 80-day moving average and yet to break our initial support. So the good thing is you are seeing a reversal move within a 61 point Fibonacci level, and you are seeing plenty of the confluence support within here. So a new high low structure on the back of yesterday breakout above this 33-day moving average, similar breakout on RSI, D-trend about to enter bullish territory and higher trading volume, and this actually give indication that the correction earlier has ended and we actually enter a new phase of the up cycle. So we reiterate our technical buy with the new and high target at 69.5 cent and 75.5 cent, while the stop loss at 61.5 cent. Risk to reward ratio about 6% downside with 15% upside potential. For quant score, we are using quality with the quant scoring at 7.40.